I think this was the wake-up call. This was the moment when I said, hey, I cannot do trading to compensate, because if I do it to compensate lack of self-esteem, lack of worthiness, anything, then my moods will be highly dependent on what's going on in markets, and that can destroy our lives. I've seen traders, they've been destroyed because of this. And that got me into this way of thinking of meditations and really detaching from trading, which at the end became the healthiest thing I could have ever done about my trading, because not only it completely detached me, and we had some rough times in our hedge fund as well, with a lot of money in stake, with drawdowns which were way beyond what I could ever imagine in terms of absolute money. So this continuous detachment really helped me to cope with very challenging situations. But I think it also opened up my creative part of the brain. And I always used to be creative. And that's when it really became passion. I used to love trading from the day one, but I think when I detached from it, and this is very, very mind-blowing because it's almost counterintuitive, but the moment I detached from it, it really became a true passion. And I feel like all my trading is driven by passion, curiosity, the joy of the game, not by compensation. And I think a lot of people, I think everyone needs to understand this at the beginning.
I don't care how good you are in anything, you don't have discipline, you ain't nobody. Right. You're nothing without discipline, because you give up under the slightest struggle without discipline. Discipline is doing what you hate to do, but do it like you love it.
Hey guys, we are with Tomáš, aka Mr. Breakouts. So I'm excited to have this conversation. It's something that I talk about all the time, and that is waiting for your signal. And that could be many things in trading. So I think the biggest thing that attracts people like us to breakout trading is the fact that we wait for the signal, the market confirms what we are thinking or what we have back tested and so on, and then we get the party started basically. So Tomáš, how did you get into breakout trading?
So first of all, thank you, Jason, for having me, and I'm looking forward to this conversation. I think we both share a passion for breakout trading. Yeah. The way I got into trading was quite early. I got into trading when I was at my secondary school, and I had a friend in the class, and he was trading stocks, and he basically gave me all the introduction. Later on, I moved to discretionary trading, which was a momentum trading with indexes mainly, mostly Russell, E-mini Russell 2000. And then because I'm a very passionate traveler and most of my life I've been traveling, and actually I'm in Vietnam right now, broadcasting this one from Vietnam. Then I decided to move to fully algorithmic trading. And that was quite a journey, because I spent years figuring out and just playing with all the different models from basic momentum stuff to very complex statistical arbitrage models. And somehow I fell in love with breakout trading. The thing about it was that that was the only concept that I could really understand, which I could really relate to. And somehow, for some reason, which I still don't understand why, I was able to go to real depth. It was just like, you love it so much, you go deeper, like down the rabbit hole, and then it just became my thing. So it just fascinates me. Breakout trading absolutely fascinates me.
No, I love that. And it reminds me of that, the thing that kind of got me interested was that quote from that book, Reminiscences of a Stock Operator. And, it was basically talking about the way that when you get a breakout, it's the market confirming what you think, and you have to pay a premium for the market confirming what you're thinking. And I love that way of looking at it. And, I see that in your book, you talk about that a lot. What is the I think generally there's people who are like, I can't trade a breakout. And really, any type of trader, you're trading some sort of like a successful one, not somebody who's new and just buying things. Any successful trader, I think, buys some form of confirming signal where the market confirms it. We were talking to Jason Shapiro yesterday. He's talking about, him being mainly a mean reversion, trading market turns, trying to be uncorrelated to trend following, but he still waits for a confirmation signal. Why do you think that waiting for a confirmation signal is so important in trading?
Well, I think there's a bunch of stuff regarding confirmations. I think first of all, confirmation signal is very important psychologically. And if I may, I will step just one step back, and then I'll get back to this question. So the thing which I believe it's really, really fascinating about trading is that it's pretty much one of few trading modalities or directions where you can make pretty good money without being even 50% right. That's what fascinates me about breakout trading. You can basically be 60, 65, or even 70% wrong, and you still can make money. And I think this sounds a little bit counterintuitive to the idea of confirmation signal. On the other hand, I think it's pretty liberating. So I remember when I got to algorithmic trading, I was mostly about confirmation, double confirmation, third confirmation, and I was about predicting the next move. And although I understand the whole, like the search and why people love, and I love confirming signals as well, I also found it to be really, really stressful, because you think you found a good confirmation methodology one day just to see how it falls apart the second day. So I think it creates a lot of anxieties, because it's hard. It's hard to find a good confirm, and we will get back to confirmations, but it's really hard. And I think what really got me into breakout trading is, well, what if there's a different way? What if our confirmation can be really on the lower hand of probability, and we still can make very good money? And when I modeled basic breakout strategies, and I could see that all the heavy lifting from the probability is moved to reward risk ratio, that was a big revelation for me, because then I said, okay, so first of all, I don't need fancy signals. I just need a good favorable excursion against smaller maximum adverse excursion, and a lot of pressure goes down. Now, of course, we think about things like how do we stabilize the equity curve, which we do with diversification. That's a different topic. But it alleviated all this pressure about being right. Now, going back to the confirmation, that's the irony. So the whole mathematic behind the reward risk ratio and breakout models is very clear, very self-explanatory, and with a good, well-designed practice, it just works. Still, me being with breakouts for almost 20 years, I still have confirmations as well. I think there's something built in deeply in our psychology. Like, we love know that we're right. We know. We love to know that that we're still, like, is this psychological almost a crutch when we have something which confirms that we're on the right path. We make it easier through drawdowns. We make it easier through difficulties. So I would say, for me, one of the confirmation technique that I found, which relates nicely to breakout trading, is, for example, looking on higher time frames. I trade a lot, 15, 30, 60, 90 minutes. But if you go with the overall direction, with a daily time frame, it just, and I call this market quality. If you go well with a given market quality, with the overall trend, not just your signals get better, but I think you feel aligned with the overall market, and it gives you just this psychological confidence to go through difficult times and the fact that you will be right only 40% of the time. Does it make sense?
Yes, absolutely. So I also, recently brought this up, and it's a little bit small on the screen share, but it's what you're talking about. You could be right even 30% of the time, but it's the risk to reward ratio, which means so much to us. So the risk to reward ratio getting higher means that, and that's also the thing, we're looking for these long-term breakout strategies. We're looking for these outlier events. So we only need to be right, 30% of the time. And we can make money and be very profitable. I think that's it's also very hard psychologically, like you're saying, that it's very hard psychologically to go through these type of events and be losing in these losing periods, and also understand that, hey, this system is going to work out. I will make money over time. I need to really kind of stick to this strategy. It's really hard to do, and I think that's why so many people get or turned off to it. Honestly, there's a lot of people who are like, oh well, you're this long-term trend follower, these systems are only right 40% of the time. How do they make money? And it's like, well, one, people like us are very comfortable with just being wrong. I'm get good at that over the years, and that's something that I continue to kind of work on. And two, it's as we're continuing to be wrong, we have the confidence in our systems to continue to make money. So, I like what you said there, and I think that adds perfectly into what you said about risk to reward ratio. So, like you said, you found this positive expectancy in these systems, and that's all, you people like you and I care about. So that was your big aha moment of going, okay, well, now I'm going to trade this type of strategy. So what markets did you trade when you first started to do that? Because you mentioned you went from the Russell. So now what do you trade today?
That's a brilliant question, which I think it's leads beautifully to what we just discussed. So obviously, I had a lot of experiences. I had before a lot of experiences from the discretionary trading of E-mini Russell 2000. That was my first market. Then I moved to E-mini S&P, E-mini Dow Jones, and all the other indexes. I was very familiar with indexes. I had spent 10,000s of hours in front of the screen, and I really, really understood the structure very, very well. So for me, moving towards indexes, it was very natural until I stumbled upon across this challenge, exactly as you said. You have this discomfort, like you're only 40% right, and you have to naturally go through periods of drawdowns, and drawdowns always comes with doubts and self-doubts. Am I doing the right thing? And does the edge still work? And then that's the moment where we traders try to elevate our game and see what is the next step. Well, my thinking at that moment was, okay, let's see what would happen if I would add a market which is completely different than indexes, which behaves completely differently. And I had a friend, and he actually shared with me some breakout ideas on Japanese yen futures, not forex, but futures Japanese yen. He shared with me some ideas on natural gas, and I tried these ideas to put them together with my indexes, and it just fit beautifully. It smoothed out the whole performance. And that was my biggest revelation. So the first one was, we don't need to be right all the time. We just need a positive expectancy, as you said. And the second one was, once you start stacking these edges on low correlated markets, it will solve a lot of other issues naturally. The first one was the reward risk ratio solves a lot of problems. The second one was the diversification. It just sorts out so many things. So that was the moment where I started to add more markets, not many at the beginning. And actually, I didn't even need many markets to smooth out the stability of the equity curve quite a lot. I mostly focus on energies. I had some grains. The first one was soybeans. It was probably 5 or 6 markets, not a huge portfolio. Today it's a different story because we run a small private hedge fund which is built on breakout strategies, and we trade over 20 markets, which of course helps with the diversification as well. But I believe that the more markets we trade, low correlated, again, the more we're getting out of this positive expectancy. I think
I completely agree. Yeah, that makes perfect sense. When you're looking at that type of strategy, and adding more markets, you literally do get more out of it. I think some people think people like us are crazy because we have so many things that we're trading, but they don't understand the idea of being in so many different markets is because we can catch those big outlier trades. Because once again, we're looking for those 1 to 5 risk to reward ratio. Sometimes, trades go a lot further than that. Look at Coco for an example. That's an outlier event. So how important do you think outliers are to trading breakouts?
That's a very good question. I'm not so much about outlier opposite. When I test a new breakout model, I always have a look at the behavior once I exclude all the outliers. But again, now the question is, what is really an outlier? Like, we're aiming for a 3-to-1 reward risk ratio. It is in a sense already an out. But I think once we have a model which has got this positive expectancy, then what I like to do is just I look even deeper and see if there are some other outliers which might have contributed a big portion of the overall profit. And in general, my breakout models, I want to see they're not driven by outliers that much. I rather see that the vast majority of trades is just because the edge is there, and 80% of trades just generated 80% of profit.
You still there, Tomáš?
Yes.
Okay.
Yeah,
So
yes.
we got to freeze. Okay, there we go. We're good. Okay. So yeah, I mean, for me, I guess I like the way you backtest. That actually makes a lot of sense because you're pulling out those extreme events, and just understanding that, hey, the system would be profitable without those extreme events. That's really interesting and something I've actually never heard before. I have to look into that more. Because if you're profitable in just normal times, you can be profitable just anytime, basically. I like that a lot. For me, I really do kind of think of the outliers as really important. But at the same time, you've kind of opened my eyes to another way of looking at it, because if you're profitable without the outliers, the outlier events will be extremely profitable on top of it. So I really like the way you looked at that.
I think it also depends on the time horizon we look at. So my breakout rates are pretty short. They can last anywhere from a few hours to 5 days, because I usually close all the positions for the weekend. I don't like the weekend exposure, the risk of the over the weekend gap. So I think if the time horizon for breakouts it's a little bit shorter, it's easier to get a higher sample size in the backtest, which usually for me it's hundreds of trades. And then when you exclude the biggest drivers of the equity curve, the biggest outliers, you still have a great sample size which you could live from without these outliers. And that's kind of my philosophy. Like these outliers are icing on the cake. But as you said, if we can have a decent performance without them, that's for me the stable base which I want to build upon, ideally.
And you don't hold over the weekends, is what you just said, right?
No,
that's
never.
That's very interesting. So do you get back into the trades the next week, or do you just cut off the trades completely?
I cut out the trade completely. I would say since most of my time frames are 15, 30, 60, 90 minutes or similar, I'm playing more, let's say, I wouldn't say intraday moves, that's not correct, but let's say just these intra-week moves. And I think there are, on many markets, there are a lot of intra-week moves which are really potent, which are really strong on many markets. And I think that's all we need. And also my philosophy is that I'm a big believer in sample size. So first of all, I think that the bigger the sample size, the higher the confidence in your edge can be. I believe that there's a relation between the sample size and statistical significance or credibility of your edge. That's my belief. And then I believe that the frequency, if we have a moderately higher frequency, it's easier to produce more stable results. In other words, we're not dependent on one long move, which can take months and which might not happen for months, but we're rather dependent on these intra-week movements, and we always have some in some markets. So that's also part of my philosophy, like being in smaller moves, but more often.
Interesting. It's it's something that I've actually never heard before talking to a systematic trader. So I find that really interesting. I've never heard that before of people getting out at the end of the week, or just looking for these intra-week moves. However, at the same time, like that actually is a big thing. Those things actually do happen. So super interesting. Hopefully we can continue to dive into that a bit more, because I'm kind of fascinated by that fact. So one thing that we should talk about too is, you get into this thing, and in your book you talk about learning about trend following, learning about breakouts, learning about all these things. And then you kind of go, hey, I'm going to do it this way though, which is a little bit different than, we all have our learning curve, we learn, and then we figure out how we fit into trading, how we can trade our best, what fits our personality. Like, how important do you think it is to fit whatever type of trader you are into your personality, so you can do things like trading? Your personality obviously might be more intra-week, don't like weekend risk. How important do you think that is?
Honestly, I think it's absolutely essential. And I think it's one of the most underestimated things because, first of all, a lot of beginners, they don't know what their trading personality is, and they cannot know it until they go through real trading experience. So they assume, and mostly they assume my trading personality is very aggressive because there's some part in their brain which is very greedy and wants a quick profit fast with zero risk. So I've known so many traders during my life, so I've seen this pattern quite a lot. Like, I'm an aggressive trader, then they're in a 5% drawdown and they're freaking out like crazy. Like, oh, 5%, I'm losing 5%, which for you and me, it's nothing, right? Like, it's a daily volatility. That's nothing. But what I can confirm, not even with me, but with many other traders who now I consider to be mature traders, the maturity, the stability, the profitability really shaped out once they understood their trading and risk personality, and once they really understood what resonates with them. And I think it's so important. It's so important with some people, and I've been thinking about this a lot, and also studying trading psychology a lot, another fascinating topic for me. And I think it was Dr. Steenberger. He wrote in one of his books, he said, well, some people are just contrarians, and they love and mean reversion because that's their entire life philosophy. Whereas me, well, just 15 minutes ago or 20 minutes ago, I said we had this conversation before we started, and I said, let's go with the flow. That's breakout traders, right? Like, we go with the flow. So we do what is in our personality. I think you're muted.
Sorry about that. But yeah, so no, I love that. So well said. When you try to start trading in general, it is so hard to kind of figure out what type of trader you are. And, I'll talk to people all the time who are traders, and we'll all have the same they'll all kind of have the same thing as they're starting out. Hey, I want to be this type of trader. Hey, I think I'd like to do this. Hey, I want to do it this way. And this goes on and on and on and on. And really, it's like you got to figure out how this fits into your lifestyle. If you're working a full-time job and you want to be a day trader, that might not work. If you're want to be into breakout strategies and you can't handle, volatility at all, and you're kind of a trader that's like very long term, like I am, that's probably not going to work for you. But if you're, then you kind of come in, and I like what you said is, you come in and you're like, okay, I go with the flow, but also I don't like the weekend risk. So therefore, I'm going to backtest and build my systems like this. I think that, like you said, it's essential. I think it's something that isn't talked about enough, because really it's the most important thing as a trader, because I can show you exactly how I trade. And I actually had that thing up that we were just talking about earlier on my screen. I was looking at it while you were talking, and the win rates of being 30%, 40%, 50%. Most people don't like understanding that that's kind of trading. You're going to be wrong a lot. You got to be comfortable with being wrong a lot. And if your personality doesn't match with that, I had a friend I talked to the other day, very intelligent guy, very put together, been through all types of school, everything you could dream of. And he kind of was talking about me in trading, and he was like, you put together really great returns, but he's like, you're kind of a grunt. And I was like, what do you mean? And he was like, well, you're kind of a grunt, like you just put on the next trade and you don't really think about it. And I'm like, yeah, I'm also like, because of the way I grew up in my life, I'm very comfortable with being wrong a lot. And so, like you said, like I could go on forever about this, so I'll shut up so I'm not taking up too much of the time. But it's like, I love this conversation because I think it's completely right. You got to figure out how it fits to you, what type of person you are. No matter what, like if you're trading, you got to go through, you got to persevere through hard times and continue to build and grow as you're going through this process. So, as you are learning and going through all these things, let's talk about your grit to continue to push through all these things, because learning trading is a hard process. You got to let go of your beliefs over and over again. You got to change your mindset over and over again. So what exactly, tell us a time that was maybe hard for you as a trader, that you had to really kind of dig deep and understand that maybe I need to switch strategies, maybe I need to do this. Could you elaborate on that at all?
Well, with all the honesty, I think it's every day, right? Like we traders are pushed every day, and we love it. We love intellectual stimulation. We love challenges. Sometimes it's almost not verbal. Sometimes it's fun. But the truth is that markets are changing all the time. We do have to keep up with the pace. We have to keep improving, keep working on models. So I would say every time is challenging for me, but I would say it's not. I think for example, to grow, if you have kids and take care of kids in today's society, especially in particular areas where are more challenges than in other areas, I think it's equally challenging. I mean, you have challenges every day. Just you're not done. It's not like you have a baby and the baby you send it to school and you're done. And it's same with trading. In a sense, you're always there's something new you're learning, you're adapting, and it enriches your life. So I would say trading is always challenging, and I think for me, the biggest question from the beginning was, what is the mechanism to adapt? What is the mechanism to cope? What is the mechanism to grow with open mind, with markets, not being bitter, just let go your mistakes quickly. And for me, the answer, and it already happened about 20 years ago, was meditations. So I'm a big believer in meditations. I've been meditating for 20 years. In fact, I've been traveling around Southeast Asia for the last 3-4 months, meditating with the monks in Chiang Mai and in other places. And that's I think once we have a method which gives us which helps us to be grounded, which opens our creative brain, and it can be different from for someone else. It can be playing piano. I don't know, like we're an individual. I think trading will become as much of a normal challenge as anything else in life. Just like you stop overthinking it. Hey, we have challenges. You go to your daily job and can have big challenges, like cross the road on Manhattan, right? Like you're in danger of your life every time you do it. You know what I mean? So it's same with markets. You're in danger every time you're in position. That's life. Hey, we have to deal with it. That's what we do. That's what we love. That's part of the game.
This is a kind of a deep question, and because I really love this conversation, because for me, I believe that like there's so much more that goes into trading besides the actual trading. I think that the part of your mental health, like you meditating, people all have to have something like that to ground themselves and get back to normal, especially in this business, because you will drive yourself crazy. There is so many things that can go wrong, that can bother you, and the ability to kind of shut your brain off and then come back with fresh eyes is probably one of the most important abilities as a trader that you have. So a question I have, just out of, curiosity, which is, you're, as you've grown, you travel around, you meditate. Is there a time in your life where something came up that kind of built you into the person you are today?
That's a brilliant question, and that's really deep question. I would say anything that was happening in my very early stage of trading career, when I was a discretionary trader. I had a lot of downs, a lot of down days. Like really, the market was off, my trading was off, and it wasn't a disaster financially. It was just a drawdown, like 10-15% drawdown. Nowadays, it's nothing. But at that time, I highly correlated my well-being with my ability to extract money from markets. And I realized this was a very, very, very dangerous thing. And I think this was the wake-up call. This was the moment when I said, hey, I cannot do trading to compensate, because if I do it to compensate lack of self-esteem, lack of worthiness, anything, then my moods will be highly dependent on what's going on in markets, and that can destroy our lives. I've seen traders, they've been destroyed because of this. And that got me into this way of thinking of meditations and really detaching from trading, which at the end became the healthiest thing I could have ever done about my trading, because not only it completely detached me, and we had some rough times in our hedge fund as well, with a lot of money in stake, with drawdowns which were way beyond what I could ever imagine in terms of absolute money. So this continuous detachment really helped me to cope with very challenging situations. But I think it also opened up my creative part of the brain. And I always used to be creative. And that's when it really became passion. I used to love trading from the day one, but I think when I detached from it, and this is very, very mind-blowing because it's almost counterintuitive, but the moment I detached from it, it really became a true passion. And I feel like all my trading is driven by passion. curiosity, the joy of the game, not by compensation. And I think a lot of people, I think everyone needs to understand this at the beginning, because I've seen people who they had to pay their debts, so they chosen trading because of that. That's the end. That's the end. Don't even try. Don't go to trading to compensate. It will eat you alive.
That is that's deep, because that's everything that I, talk to people about all the time. It's the reason why, like, my trading account, I still do not touch that trading account. I think if I ever was to live off of it, and it's gotten very large over the years, but I still feel like if I was to live off of it, I would lose it. I still have to think about it like I'm not a very flashy person. I could care less. I love the game of trading. I generally love doing it. I just adore the fact that I can wake up every day and do exactly what I love to do. That's great. However, there are many people who will hit me up all the time, and they have the same conversation with me. Hey, I'm running into some debt problems. Hey, the only way to get out of it is, or hey, like, I have an extra this. I think I want to, like, trade for a living for myself. I think I'm going to quit my job. And it's like, whoa, like all those things will absolutely kill you as a trader, because this is a very, very different game than you would think. Your mental health can destroy you. Whatever it is, whether you're algorithmic, systematic, you still have to run the systems. You still have to stay plugged in. You're still the person who clicks the button. So if my mental health is off, my strategy is usually off. I even remember there was a time where I wasn't doing conversations like this anymore. I was working with a big hedge fund, and I wasn't allowed to have conversations like this. And it really hurt my trading. And I didn't, at the time, I was like, well, I'm systematic, like, who cares? But really, like, I noticed it hurt my trading, and it hurt my mental health. So, I like to have these conversations, because it's almost like, one, it's really good to have these conversations. Two, it's kind of like a warning, like, this is what you do not want to do as a trader.
Right, right, right. I think trading is such a great comparison to the entire life. Just so, for example, we touched on this topic. If you really are desperate to make money, you'll never make it. I think it's same like when we were dating, when we were 18 and dating, right? Like the more desperate we were, the more we repelled all the girls. If
Yes.
you know what I mean?
Yes. Yes.
I think it's same in trading. Like once you and once you don't give up, okay, then everything went really, really well and really smooth. And I'm seeing a lot of parallels like this in trading as well. Like the more you become detached and you enjoy for the sake of the enjoyment of the game, the better it gets. And I personally believe that it's just a matter of choosing the game, but otherwise we play a game everywhere. Like you work for a corporation, you play the whole game of corporate ladder, and it's a game as well in a good sense, not in a judgmental sense. So I believe whatever profession we pick, we play a game. The question is, have we picked the game we love to play and we're passionate about? And I think it's same like in sport. In sport, a lot of the best athletes, they just love what they do. They don't think about scoring whole time. They just love the game. That's it.
Yeah, and that's the most important thing, and that's why, when we got on here, I said, hey, like, I'm really into the idea of breakouts too. Let's just go. And you said, yeah, let's let the passion drive us, and that's really, I think it's important to be, whatever it is, like, if you don't really love doing something, you can't stick to it. You can't really stick through it with the rough times. That's the way with it. It is with kids. It is the way with relationships. It is, there will always be rough times in everything you go through in life. How do you handle that? Do you continue to persevere because you love doing it, or do you run away because you already hate it? Like, it's something that will show you that all the time. And trading, we have lots of losing periods. Like we talked about, our win rates aren't, like there's people who tell you they have 90% and 100% win rates and stuff. And that's on most of the time, that's BS. There's no such thing for the most part. You can have higher win rate systems. But if you're really looking for these major moves, it's like someone like me or someone like you who's using breakouts as a consistent swing trading method, you basically will have these lower win rate periods. And when you're going through those, how do you handle it? Do you just shut off all your systems and run away? Do you do you decide that, hey, I'm not this type of trader anymore and change everything? And also the thing, and this too, is let's talk about clients. So when you do go through those losing periods and you understand that you have to stick to this system because it will come back. And the second you usually shut it off is that's when everything starts to come back. So how do you handle when you have clients telling you, hey, we need to change this strategy. Hey, we need to change this system.
Well, I learned a lot about this, and I learned also a lot of tricks just from reading books of other hedge fund managers. And I remember, I don't know who it was, but it was one hedge fund manager before we opened up and we are a small private hedge fund. Before we opened, one hedge fund manager, he said, it's very, very important that you are 100% transparent and honest with your client. And you have to honestly tell him the whole worst scenario. You have to draw the picture in vivid colors. And I did this. It's been a couple of years ago already. We had a German, I'm from Europe. So that was, like most money are in Germany, or used to be. And we had a German, he was semi-institutional client. He was not a private client. He brought some banks and some institutional money and pulled them together and invested with us. And I remember the day when we met for the first time. I brought up my laptop to the meeting, and in front of his eyes, I showed him the model of the portfolio, all the simulation, and in front of his eyes, I ran the Monte Carlo analysis. And I said, there is a 95% confidence that we will be in a drawdown of at least 20% for up to 1.5 years. Period. That was it. Everything else looked great. Like the model showed it's only 5% chance it will happen. Most of the time we should have every quarter winning, but there is a chance this could happen. It was one of the CTA programs. We were running a few CTA programs. This was one of them. Guess what? It happened. 2 years later, it happened. We went to 20% drawdown, and we were in this drawdown for a long period. It was about a year, which even in my worst dreams was not planned. But guess what? I prepared him. I was very transparent, and he knew that. He accepted that, and he didn't say a word. He said, it's a long drawdown. It's holding me back from bringing more money from my institutional clients. But I understand it is what it is. I understand the nature. You prepared me for that. And he was surprisingly calm. And I think it's very, very important when we have clients, we have to be brutally transparent with them. And most of people, I saw that a lot of people who try to manage money, they picturing the profitable side, the heaven. I do the opposite. I always picture the hell. And once the potential client, he's okay with that, I know that's the guy to take in. And I have a business partner, and he's actually in charge of client acquisition. And we had an agreement that he has to do the client. And if the client doesn't go through this test, we don't want him. We rejected a lot of clients because there will be time of challenges, and we want to stay with the client and not have another stress behind our shoulders.
No, I agree. That's well said, and I think that's managing their expectations is very important. the one thing that I've also gotten into is you manage their expectations, and then you blow their expectations out of the water. Like, for example, I had a really good couple years in 2019, 2020, and 2021. And this whole time I'm telling the clients, hey, at some point we're going to have a very rough period. At some point we're going to have a very rough period. At some point we're going to have a very rough period. The last few quarters of 22, were pretty flat. There was no real alpha at that point. There was no performance. And, people started to not get it because we had such a good period before that. So once again, your idea of really setting them up for worst case scenario, that's the key. And something I've learned over time, I didn't ever paint a rosy picture. I would be like, here's what we do. Here's exactly, what our performance is. Here's what our average drawdown here's our max drawdown. And, when you don't really run it through, like you just talked about, like, hey, we could do this, and there's a very high probability that this could happen, they could get confused. So I really like the way you do that. I'll probably steal that from you as well, because honestly, that's the thing for people like us. Like, we're very passionate about it. I assume you're very much like me, where it's like, I don't care to run all the money in the world. I don't care to make the most fees in the world. I care to be the best trader I can be. And that is more important to me than anything else. So because of that, I don't think I'm ever going to have the biggest fund in the world. But at the same time, I want to have the clients that are going to stick with me through good and bad, and understand that these losing periods are just short term, and they always do come back, even though you might not feel that way at the time. So I really like the way you said that. So to end off, now that we're getting close to the end of the hour, what are you thinking is some way, like you talked about earlier, we talked about the traders having problems, as they're sitting there and trying to like figure out their life and making up for inadequacies of their own life and trying to make it up through money in the markets. Let's talk about some ways that people could maybe do it differently. Maybe ideas like, how did you get into meditation, and how important is it to meditate for you? Obviously, you travel and do it. So I'd love to talk to you a bit more about that.
Well, I think one of the things that I'm most grateful for when it comes to trading is that it got me into meditation. And for me, it's been life-changing. Like that was if nothing else, this was my biggest investment ever into myself and into meditations. And people always have a lot of excuses why not to meditate. Well, meditation is very, very easy. There are plenty of applications, plenty of teachers. It takes 15 to 20 minutes a day. That's all you need. Like, everyone can wake up, close their eyes, and meditate for 15 minutes, do the same thing before going to bed. The results are not instant. There are rough periods when it comes to meditation as well. But through time, the benefits are, I think it's not even possible to describe, because it's hard to believe. And it's different with different people, is different. But for example, for me, the biggest thing related to meditations is my problem solving ability has increased 10 times. And I used to be pretty good problem solvers, but now I'm up to very big trading challenges. And I know it's because of the meditations, because the creative part of the brain just got enhanced quite a lot. And I would say the most importantly, and I will repeat something what I already said, it got me to understand myself, and it got me to understand the whole concept of compensations, and the way I used to compensate for things in trading and then detach from it. I became very aware when I do it in any other area of life. And I think this is a huge victory, because I believe once we try to compensate, we actually became victims of our notion or of our effort to compensate. Like there's some very unhealthy engine just trying to overwork and overstress, and it's very unbalanced life. And thanks to trading and meditation, every time I try to compensate for something, I'm able to get an awareness of it and say, hey, am I doing something because it's coming out of the passion, out of a curiosity, or is it coming because I want to compensate for something? And I think it really changed my life. I consider myself be quite happy person, to be honest. A lot of time without any reason, and I think it's because it got me to understand what compensation is, how compensation can get us almost on a health path where we work to that and I don't know, stress to that, and then detach from it. It's been life-changing. So I would say meditation not only will solve a lot of trading issues, including anxieties and stress of drawdowns and insecurity of long periods of drawdowns and anything like that. But I think it will just improve so many other areas of life that it's a complete win-win situation. And I know this is a trading podcast, so I'm sorry if I just
No,
go
this is
too
this is
much
what
to-
this is the things I want to talk about. Like because like you know and I know, like these are the most important things of trading. I think people come here to get, hey, I bought this today, or hey, and it really, like, none of that matters. What matters is, how do you handle drawdowns? How do you are you trading and compensating for things? You know, like that's the truth. You know, if I think about the people I've seen do well in trading and the people I've seen do terribly in trading, most of the time the people who've bought things like a Ferrari or some sort of crazy car, or, you know, bought a huge house, or all these things, those are the people that usually do pretty bad as traders. The people who do well as traders are the opposite personality. The people who are very understand themselves, understand things like, am I actually doing this because I want to do this, or am I actually compensating for something as a trader? You know, there's all of these things that are really, really important. So I really like the way this conversation went. I think it's perfect. Nothing bad about it at all. So thank you so much for coming on. This is a lot of fun. I hope everybody got a ton out of it, just like I did. And we'll talk soon.
Thank you very much, Jason, for having me. This was a great conversation. I did not expect we will go so deeply, and I really appreciate the depth. I think it's quite rare. I've been listening to a lot of trading podcasts. It's quite rare to open up to this depth, and we were talking about a lot of trading vulnerabilities, which is quite an opposite to talking about flashy lives and, as you said, Ferraris. But I think we touch the real trading stuff, and I really appreciate it. So thank you for the depth.
Oh, thank you for coming on, man. This was great, and we should do this again soon.
Great. Love to.